Good evening, my friends. Welcome to Petron Live Sharing Class. This is our first live class of 2024, and we have many more to come. So, once again, it's my greatest honor to be able to share with everyone here. Hope everyone in my class is able to gain knowledge from my sharing and able to fully understand the materials I prepare for everyone. Please also take some time to read up again if you have any doubts, and also put the materials you learn into practice. As I always say, practice makes perfect. Financial freedom is our ultimate goal, so let's work hard together to achieve it. As for today, I will continue to share Dow theories with everyone, and today's content are very important to everyone also. This technique is able to help everyone to have a clear understanding about how to read the charts. Okay, besides sharing trading techniques, I will also continue to scan for more profitable high quality stocks, share about the market analysis, and guide everyone for a brighter future in 2024. So, thank you for everyone's support, and we'll move on to the contents that we'll cover today. Let's take a look at the content page. Okay, so today we have 5 topics, and let's start off with the market analysis. Okay, for today, we'll be overall take a look at the overall market trends. The market experienced a slight decline today, but overall remains healthy. The concerns about the interruptions in the Red Sea poses a short-term risk to the global supply chain and freight costs, while profit bookings remains at relatively high. Investors are also cautious about the possibility of excitement in some markets, especially for smaller stocks. Okay, let's take a look at the Nifty. Okay, today Nifty for the daily chart. The market start off relatively flat, then began to decline. But after a while, it start to rebound before midday and recover almost half of the decline of the morning by the time it closed. From the perspective of the market trend, there is a demand for adjustment, but the buying pressure from below is relatively strong, causing the current level to oscillate in a oscillation pattern. From the technical perspective, the price today has just tested near the support level of 21,600, then they rebound. So as I mentioned, that the 21,600 level is an important short-term support level. It is not easy to break through on one hand, but on the other hand, is case as a effective support. It can quickly resume its upward trend. Okay, you can take a look at the chart. Okay, the location where the price is tested today is also close to the 10-day moving average on the daily chart, which is also a support level. Therefore, if it's reasonable that the price was able to rebound all the way in the afternoon, today's oscillation is mainly due to the worsened situation in the stock market and the uncertainty of the third quarter profits of domestic enterprise. However, in my opinion, even so, it is not possible to shake the foundation of a bull market. Okay, so let's move on to take a look at the Sensex. Okay, as for Sensex today appear a bit weaker than Nifty. Firstly, by the final closing, it fails to recover even half of the morning decline. Additionally, the price was already touched the MA10. during today's downward exploration. But this is just a minor differences and not a significant. Everyone should be aware of this. In fact, that should be noted that the current price is within the current channel, which was shared with you guys a few days of trading ago. In the previous trading days, the price was near the upper edge of the channel, okay, which also served as a kind of resistance. Therefore, today's slight adjustment in prices is a reasonable trend. Of course, this channel will also appear in the Nifty. Okay, from the chart, it can be seen that as long as the price does not fall below the channel, okay, below this channel, it will eventually continue to oscillate upwards. Okay, since I just now have already analyzed about Nifty, and I will not go into more details to explain about Sensex. Okay. Okay, let's move on to the next topic, macro analysis. Okay. As I mentioned before, macro analysis is based on data and news. I have already shared with everyone why is it important, why is it important to read up and pay attention to the news or data, because as investors, all these news and data are equally important for as the technical analyst. Okay, so the difference between how we interpret the news and data can be different people can interpret differently. Okay, you might read the news and I understand the news in a different way, and I understand it in a different way. But all this also boils down to whether it is right or wrong. How we interpret can only be measured by the actual market trends. So it's very important, okay, to read up news and make it a habit and understand what is the news about, okay, and how it affect our market. Okay, let's move on. Okay, the first news we'll be talking about. Okay, in December, foreign portfolio investors, which is the FPI, saw a sharp increase in net investments in the domestic debt market, reaching a 77-month high since July 2017. Market participants attribute the significant inflow of FPI to the impact of domestic policies and the dovish stance of US Federal Reserve in December. According to the data from the National Securities Depository Limited, FPI funds flowing into debts in December amounted to 18,393 crore in rupees, compared to 14,106 rupees crore, okay, in November. So market participants anticipate a surge in the early capital inflow in the debt segments of the FPI in the first quarter. It is important to note that the debt market and the stock market are two major investment markets for the FPI in India. Yesterday, we shared information about foreign investment in the stock market. The simultaneously entry of FPI into these two major markets highlights the investment value of the India market. It is worth mentioning that this type of investment represents a long-term trend. It is clear that the foreign portfolio investors, which is the FPIs, are unlikely to withdraw their investment soon after entering the market. Therefore, the sustained inflow of foreign funds is expected to continue to have a positive impact on the upward movement of the Indian stock market. As I mentioned before, I am not only optimistic about the stock market in 2024, but also have a long-term positive on the India stock market. I hope that all of us can reap more profits in this bullish market and achieve our wealth as soon as possible. Pension Ventures is always committed to support everyone to achieve this goal. Okay, the next news. In 2023, which is last year, India decisively resisted the global headwinds and is likely to continue as the world's fastest growing major economy. Supported by demand growth, moderate inflation, a stable interest rate regime, and robust foreign exchange reserve. Despite the widespread of pessimism in developed countries and worsening situations, India's GDP in the third quarter still grew by 6.1%. The growth rate for the quarter ending in June increased to 7.8%. And for the quarter ending in September, it was 7.6%. The momentum of growth is expected to continue in the fourth quarter, position India as the world's fastest growing major economy, which is far ahead of China. In the backdrop of the worsened climates and global economic slowdowns, India finds comfort in the foreign exchange reserve, which crossed the US total of 600 billion US dollars, okay, the mark in December, which is last year, after about 4 months. All these indicators points to India's development is potential and serve a significant assurance for the sustained rise for the Indian market. Okay, we will not delve further into this today. Okay, let's move on to the next topic. Okay, we'll continue with Dow theory. Okay, as I understand, I will continue with everyone to share some Dow theory. Everyone should have a general understanding, okay, from our previous class. However, it is uncertain. It's impossible for me to explain everything in like one class or two class, okay? So, as my next class, I also will try to share more, okay? Let's see what I have prepared for you all today. Okay. My last live class, I share about the three major assumptions, okay, of Dow theory. For today, I will share the 5 principles, the major principles of Dow theory. Although these are the theoretical contents, but we still need to know them, and because it is quite important to everyone. Okay, what are the 5 major principles of Dow theory? Okay, number 1, principle of mutual verification and confirmation. Number 2, stock price movement have trend, and there are 3 types of trends in the market. And for point number 3, trading volumes verify the trend. Okay, point number 4, the closing price is the most important. And point number 5, only the beginning of a new trend can prove the end of the original trend. Okay, just by explaining or sharing like this, maybe it can be a bit empty. So let me proceed on to the next slide with more examples. Okay, let's take a look at the first principle. Okay, principle which is, what does this mean? Okay, it means that different indexes must verify and confirm each other. For example, the combine of Nifty and Sensex, okay, to judge whether the market is bearish or bullish. Okay, or analyzing the Nifty index, the Nifty Bank index, and the Nifty 100 index together to have a very intuitive understanding of the overall market trend. Of course, the trend of the Nifty index and Sensex index are mostly the same. However, some friends don't really need to judge the bull or bear because of Indian market has always been rising, okay, for the last 20 to 30 years. Okay, so sometimes you can't see from that. Okay, in addition, all individual stocks need to verify to confirm with the index. When the index is trending downwards, the majority of, or vast majority of the individual stocks trends will not be good. When the index is strong, trending upwards, the vast majority of individual stocks will also rise. Just with some differences in extent of the rise only. Okay. Okay, for principle number 2, okay, stock price movement have a trend, and there are 3 types of trend in the market. Okay, here we finally talk about trends. Okay, according to Dow theory, market trends are mainly divided into 3 types. Primary trend, which is considered as the main market trend, okay, usually lasts for several months or several years. This is a major market trend. Secondary trend, which is number 2, usually lasts for several weeks to several months. Okay, for the third trend, it will last several days to several weeks. Okay, in some cases, daily trends last only a few hours or within the day. Okay, by using these 3 trends, traders can identify the main trend of the market by entering the main time frame, then enter a smaller time frame to identify the second and the third trend. Okay, to take note here, one word is used, which is time frame. Okay, this word time frame, which is what we often call time period also. In simple terms, it is also what we usually call long-term trend, medium-term trend, and short-term trend, and so on and so forth. Okay? Okay. Okay, actually, just knowing these 3 trends doesn't mean much of our practical knowledge. The real guidance of Dow theory lies in telling us the direction of these 3 trends. Trend in the direction of the price movement. And there is 3 trends direction: upward, downward, and sideways. So we call them upward trend, downward trend, and sideways trends. Okay? Sideways trends is also called trendless state, meaning that it's like, you see, sideways. There's not really a trend. Okay? Okay, all this trend operates in the form of alternating peaks and troughs. Okay, the peaks and the troughs of an uptrend gradually rise and move upwards. Okay, meaning upward trend. While the peak and trough of the downward continually decrease and move downwards. Okay, which is the opposite. With the guidance of trends directions, we will know to go long in a trend and wait and see for a downtrend. Okay, go long for uptrend and wait and see for a downtrend. Okay. Truly follow the trend also is another way we talk, follow the trend, be friends with the trend, and thus achieve greater profits. Okay, all these we always will achieve greater profits. Okay, next, we will use 2 graphical examples to help everyone to understand the above explanation of what I just say about the trends. Okay, you can take a look. Okay, I have marked some point from 1, 2, 3, and 4, so that it can be more can be more applied in your future trading. Okay, this is just an example of the trends from a time frame perspective. Okay, time frame. Okay, see, I use the word time frame. So first, let's take a look at this graph, which focus on explaining the situation of the large, medium, and small trends. Okay, at point number 1, okay, which I marked and 1, we can call this the primary trend, which is the whole thing. Okay, the whole thing. And which is the largest, as I say, it's the whole entire trend. Okay, we can see that although the price fluctuates, the center of price movement has always been upward, right? It's going up. It's going up, all the way going up. Okay, next we'll take a look at the red circle, which is marked number 2 and number 3. Okay, we can see that the direction of the primary trend is upwards. So the area marked 2 and 3 are just relatively brief pullbacks. Okay, inner, okay, upward movement. After the pullbacks ends, the price continue to move in the direction of the original trend. Okay, meaning that this is the main trend, okay, the primary trend. Here's the pullback. After that, it still continue to go up. It didn't go down. Okay. So once again, now we take a look at position number 4, which is mark number 4. This represents the trend on a smaller time frame. Through this very clear explanation, everyone should be able to clearly understand what is the major trend, medium term trend, and minor trend. Okay. Actually, this is not very hard to understand after you have some read up on it or understand a bit more on this. Okay, let's move on. Okay, next. Understand the direction of the trend from the previous slides I showed you just now. We know that all the trends operate in the form of alternating peaks and troughs. The peak and troughs are gradually uptrend is rise. Okay, uptrend is rise and downtrend is decrease. So let's take a look at the left hand side one first. Okay, which is this one. Okay, this is a clear uptrend. Okay, it's actually 2 graphs. Don't mix it up. This is graph 1 and graph 2. We can observe that for this one, this trend is a clear upward trend. The peaks, these are the peaks. Okay. And here are the trough. Okay. Okay, let's examine the right hand side one, which is a downtrend. This is the downtrend from here to here. Okay. So here also you can see the peak and the roof. Okay, you may often heard the term called trend line, and in this graph, the trend line is quite clear. Okay, but may be difficult to express on this thing over here. However, this does not change the fact that this is still a downtrend. So remember that in some trending markets, even if the trend is not is very clear, it may not be necessary to produce a trend line. You know, trend line means you can draw a line. Okay. It's especially important to emphasize that trend is just the solid theoretical foundation for stable profitability. For everyone must study it actually carefully, okay, not just by listening to my analysts, but or by observing and learning the details. Okay, you have to study on your own also. Okay, let's move on to the principle number 3. Volume confirmation of trends. As is all well known, in primary trend of price movement, trading activities become more active as the price move. In a bull market, during an upward trend, the price rises and the volume increase. While the price fall, the volume decrease. In a bear market, the opposite often occurs. All trading is very inactive. As shown in this diagram, as the price rises, accompanied by an increase in trading volume. Okay, you can see from below is the volume. This kind of rise is relatively healthy, especially when a trend of outward movement is just beginning to emerge. If there is a new high or low in price, but the volume of the trading does not increase or even decrease, leading to a divergence between volume and price, then we should be more aware of the possibility of a price reversal. This situation often occurs at the end of a market trend. So, for many friends, the above content may be a bit difficult to understand, but that is okay. Everyone can take their time and slowly study, okay, and comprehend on it. In addition, the studies of the relation between volume and price, okay, I personally believe that volume is secondary, and for price is the primary, which is a priority. Why will I say that? Because it is quite obvious that price changes are the primary factors determining our trading profits or losses. As long as the current stock price is above our cost price, means that we are making money. If not, in otherwise it will be we are losing money. Okay, that is just so straightforward. Okay, for principle number 4, the closing price is the most important. Dow theory itself does not pay a lot of attention to the highest or the lowest prices within that trading day, but only focus on the closing price. This is because that the closing price is the final evaluation of the day price. And most investors use this price as the base for their orders. Only a breakthrough in the closing price indicates an effective breakthrough. Crossing previous high and low points within the day is ineffective. Okay, so this applies to both trends analysts and pattern analysts. I would like to particularly emphasize that in the process of learning, we should not adhere to the materials, but rather comprehend and digest it. Okay, ultimately making it to your own. We should clearly form our own set of belief and practical strategies. Okay, finally, for the last one, which is principle number 5, only the beginning of a new trend can prove the end of an existing trend, which is original trend. This is a great practical significance for us because only after a clear and definite reversal signal occurs can we determine in end of established trend. I repeat, do not always try to buy. Yeah, I think I say a lot of times on this. Do not always try to buy at the lowest point and sell at the highest point, because you cannot predict all this. Really, you can't predict. Even me myself, I can't predict it also. So what do you think? The lowest points often can be only halfway there. Okay, halfway up the mountain. And when you think that it's the highest point to sell, but in the end you actually sell too early. So what we need to do is to buy when an uptrend is clearly forming and sell when a downtrend is inevitable. The formation of a new trend and the end of an established trend do not necessarily occur at the highest and the lowest point. The advantage of this approach is that it avoids fundamentals errors and allows us to capture significant profits. The downside is that the signal feedback is slow and there may be repeated setbacks if fluctuations are small. In fact, in the stock market, there is no perfectionism. We must follow prices to fluctuate normally and not expect stocks to perform exactly as what we want or how we imagine it would be. Generally, as long as we buy stocks of good companies at a reasonable price, we do not need to worry about the daily fluctuation in the stock price. Of course, this is conditional on the trend of the price continuing to maintain an upward trajectory. Okay, alright. Today I will stop for Dow theory. Okay, next we'll continue to track on and talk more of the high quality stocks that I recommended. Okay, let's move on. Okay, for friends, today once again, okay, it's a good news also that we gain profit through trading of UC limit stocks with an accumulated return of around 70%. Actually, if you all actually go and count the compounded in returns from the market, it actually would be more than this amount. Okay, today we also bought another stock that also has the UC limit, which will have a high probability that we will profit tomorrow. Okay, these stocks, the profits are real and tangible, which is happening in front of everyone. Okay, you guys have seen it by yourself, you guys will know. And all friends who follow our trades are making substantial profits. Our ability to lead everyone in trading stocks with UC limits for quick profit fully reflects the advantages of Petron Ventures asset management accounts, which cannot be enjoyed with those normal accounts, which is a regular account. Many friends have already made substantial profit from trading stocks with UC limits, which is exactly what we wanted for you guys, or we hope for you guys. Okay, only when everyone can make money, then Petron Ventures can further expand its market influence and compete in a management scale for the headquarters event. Only when everyone makes profit using the asset management accounts, okay, can the management value or the market value of Petron Ventures in India will increase significantly. This is also a win-win situation. We try to guide everyone to make money and also help us to achieve the position of headquarters in India. Okay. Of course, the quota for trading these stocks that hit the limit, which is for the UC limit, is not unlimited. Okay, there's always a limit to it. As for currently, all members we have a lot of members now, and it's still expanding. Therefore, it might not be enough, okay, for everyone to participate in trading the UC limit. However, but please rest assured, okay, on my part, I will do my best within my limits to apply for more quotas for everyone. Okay, I will do my best, okay, and I'm also negotiating with relevant institutionals regarding new strategic trades ultimately allowing everyone to able to participate in these using limits trades, okay, to make more profits from it. Okay, you can take a look. This is the chart we compile, which is the total approximately profit of 70%. Okay, as for those stocks that we recommend to everyone, okay, my team and I, okay, will continue to track them and analyze them for everyone, regardless of the price movement, whether it's up or down. Okay, we will continue to help everyone to monitor. Okay, okay, let's move on. Okay, now we'll be touching on the stocks that I share with everyone. Okay, let's start off with Saragama. Okay, today I will not go over the basic information about the companies. Okay, I assume everyone have hear me say many times about what company they are, what they are doing. Okay, so I will skip that part and now move on to the chart. Okay, for today trend, it's clear that the previous adjustment of this stock, Saragama, has come to an end. Firstly, despite the index decline for today, the stock price did not fall, but instead they rose up by 1%. This indicates that the stock is likely to enter a rebound or upward trend in the near future. Since the low point of this adjustment was seen in December 22nd, we now can draw an upward trend line, okay, trend line, which is this line, from the below. So the rising peaks and troughs from the appear, okay, and for those who have learned Dow theory, which I share with everyone, okay, I believe you all should be able to see at least see the small scale upward trend is forming. Okay, if an upward trend can form, should we still be worried about this stock? Okay, for the current price of this stock, it's just near our recommended price that I recommend to everyone. Meaning we have no losses on this stock yet. Okay, currently it's just a matter of not having a larger profit margin and spending a little more time on this stock. Okay, so however, there is no need to worry. Okay, as I said before, good stock always rise. Okay, so give it some time. Okay, for this stock, I personally recommend to hold on to it and plan to exit when the stock price show a profit margin. Okay, let's move on. Okay, for the next one will be Adani. Okay, let's take a look at Adani. Okay, for this stock also rise against the trend today. Although it fell at one point during the day, it ultimately showed strong upward momentum by the market close. This clearly demonstrates the stock strong buying power. Okay, as I mentioned earlier, the technical chart of this stock show a standard breakout pattern. Okay, which is evidence of in both daily and the weekly chart. Okay, looking at the chart, the price retracement earlier conveniently fell near the support line and received strong support, making it a very good technical sign. Currently, the stock price is rebounding above the support level, which is this support line. Okay. We all know that there is always some stocks in the market can move against the market trend. Not always all will just follow the market trend. Okay, so and create their own market performance. Okay, hopefully that this stock will bring us some pleasant surprise. Okay, and for this stock, I recommend is everyone to continue to hold it. Okay, with a peace of mind and patiently wait for this stock to rise. Okay, I'm looking forward that it might rise over here. Okay, let's move on to Star Health. As for Star Health, the stock price has experienced a period of decline, but has shown a price rebound over the past 7 trading days, since reaching a bottom on the 21st of last month, which is last month, December. Stocks like this, which have weakening somewhat in the previous trend, but have started to rise in the market adjustment process, which receive greater attention from everyone. For this stock, the first few trading days are once again confirming the bottom and getting some support from the bottom, okay, which is over here, giving some support. As I mentioned a few days ago, the support level here is very dense, and it's hardly any downside will occur, okay, which is why there is a price rebound for several consecutive trading days. Okay, it's a rebound. Whether it's before buying this stock or after buying this stock, we can continue to track and monitor. Currently, the company is operating quite well, and there's no negative news on the company. Although the price is has adjusted, and in the previous period, I believe it will rise soon. Since I recommended to buy this stock, okay, there's indeed a small slight losses, which I personally feel need to apologize to everyone. But however, please rest assured, as for the current process of this stock, will continue to rebound. There is no need to take any action for now. Okay, even if this stock we make some losses, I will try my best to help everyone to make more profits in other stocks from other stocks. Okay, as the strategy, yeah, my personal suggestion still is to continue to hold and observe. Okay, if there's any changes that we need to sell or any updates, I will inform my assistant to inform everyone. Okay, for Infosys. Okay, Infosys stock, from the technical perspective, the upward trend line below is very clear. Okay, you can take a look. It's currently in the process of confirming the price pullback after the breakthrough. The position at 1,500 rupees is a very clear price support zone. If the price fall below this level, it indicates a weakening trend. However, it is still considered an uptrend. Okay, for today, the stock price adjusted with the market due to the previous news about the orders, but clearly found support and then rebound. As long as the price does not effectively fall below 1,500 rupees, I will still advise everyone to hold on to this stock. If the price falls below 1,500 rupees, I believe it can be sold. Okay, as for the orders I mentioned just now, I personally believe that they do not have a significant impact on the company's operation. On one hand, the lead time for orders was actually quite long. Okay, was actually too long. And the annual order amount is not really that large. So they are just memorandums, not formal orders. Okay. Therefore, I think the order event is already considered as a pass. And the focus should now shift to the stock of its own trend. Okay. We have to focus on the trend itself now. Okay, as for today, our class will end here. And thank you very much for joining my class and giving me a very, very strong support. We will continue our class on this coming Thursday, 4th of January 2024, 8 p.m. I hope to see everyone here. And thanks. And once again, thanks for your support and good night.